askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the last week and a look forward at what might happen in the next week. And this has been a holiday short week, and this will be a holiday shortened program. Typically in the holiday season, we have slow markets and rising markets, and we've seen that happen in this last week. It's year-end, a time when it's thin, there's tax selling, and all kinds of readjustments going on. Tougher to read in these markets, and we'll call it historically a tougher trade. Stocks, well, going up for most of this time period, this whole last 4 days, and moving into resistance, only closing down towards the end of this period here in this last day of the week on Thursday, of course, close tomorrow. Bond market moves to the downside mostly during this week. Gold, a choppy week, and we're looking at it bottoming. Oil, well, that got a nice pop this week on OPEC comments and certainly an oversold market, and got a lot of help by gasoline, big bounce in there. Natural gas had a very big bounce. We caught that one very, very nicely. Let's take a look here at our 60-minute chart of the stock market's action. That's the overnight trading and the trading during the day. The gray area is the overnight trading, and then the trading during the day is the white that you see in there. And we'll take a look at what was driving the market over this last week, which 4-day week as we come into it right now. So what do we have here? Well, on Monday, you can see overnight markets got a bit of a lift. You can see in there, Eurozone up about 0.8, China up 1.7. As communist China lowers its cost to businesses, eases the burden to enterprise, if enterprise was spelled correctly, and they promote mass entrepreneurship. How do you like that for communist China saying that? U.S. stocks get a rebound about 0.7% and then ease back, but then you could see strong close right over here, which really set up what was going to go on for this week. Oil price moves to the lowest that we've seen it since 2004. We were looking for a dip down under 36 in a rally. You'll see that in our short-term view. Energy stocks weak, and then gold gets a pop to the upside. Tuesday, well, that brings another one of these overnight rallies in the market. You could see what happened in here as every single bar, a white bar, that's those candlesticks moving up, as buying really came in all day into the U.S. stock market. U.S. GDP, small revision to the downside there, and U.S. stocks, well, close strong again. Solar stocks finally get a pullback. And oil does get a rebound. Look at Wednesday, another day overnight. All kinds of rally that continues right into, well, almost into the close. You can see a little downtick there on the close on Wednesday. Eurozone up. They get helped by oil rebounding. OPEC, well, they're jawboning it up to the upside, talking about $70 oil and production falling. Well, that's into 2020. That's a pretty long view, isn't it? Consumer spending rises, consumer sentiment a bit stronger, all of that giving a little bit of a lift, but existing home prices are softer. Income's rising. Now, this might have been a good sign for the market as everybody's looking for the consumer to have more money, and that may be why consumer spending is rising. Bond market pulls back by a point. Durable good orders. Now, talk about conflicting economic news. Non-defense durable good orders absolutely cracked. Take defense out of it to see that. 2 months ago, down 1%. That's a revision, and then last month down 0.5%. Is this a warning of a recession? That's a real question. But oil and material stocks, some big gainers this week. They move higher as China talk about higher China steel tariffs. So comes on the end of the week Thursday, and you can see what happened in here. World markets, well, really thin. Jobless claims again fall near a record. Consumer borrowing comes out. That's the best since 2007. That's pre-crisis time. And U.S. stocks up for the fourth day in a row until the very end, and get a bit of a sell-off. A little bit of talk out there about warnings of some sort of a terror attack in Europe over the Christmas holiday that might have got them pulling down, or maybe they just got tired after this kind of a week that you can see. And of course, Christmas holiday on Friday, and all spending joyous times with their families. So that is a look at how the markets moved and what helped them move over this last week. Let's take a look at our calendar for the coming week. And you will see that there are not many earnings announcements coming out. In fact, none, as every one of these boxes in here is empty because, well, earnings season is going to come in early January, and nothing happening here during the holidays. During the week, well, not much also in the way of important news announcements. What's been maybe moving the markets the most is the oil numbers that come out, petroleum status in here, natural gas in here, because the markets love it when we get bounces now in the oil markets. And then, of course, we get an early close in the bond market. On Thursday, the stock market will be open normal hours, and then New Year's Day, you will see right there that we are all celebrating again. So that's a look at the calendar for the coming week. Let's take a look now at this last week at what the best and worst stocks were for the week. Had still some pretty good movers this week, and one of the best movers, well, mostly beaten up stocks that had really big moves, and we'll look at a few stocks that are good examples of that. The first one we're going to take a look at is CNX, Consol Energy. This is not one I talk a lot about. The reason is because it's a utility stock and tends to be pretty boring. Consol Energy is a stock that really is in the coal category, and of course these stocks have been very, very beaten up as the present administration's been very anti-coal and very positive alternative energy. You can see in here this pattern right here where, look at this low that came right there, and this low that came right over here, and the low do right here. This is a little premature for us, but this gets a 29% pop on the week. So that is the winner in our universe of the biggest gainers, CNX. Take a look here at another stock that is in this same category, NRG. Not Consol Energy, mostly a coal, not really much of a utility, but NRG, pretty much a pure utility, except for the fact that they supply some solar. And you could see here that the bottom here was being anticipated. You can see this is the pattern that we were looking for right there, and that's really what we're getting in there. So this stock looks to me up 19% on the week. That you wait for a little bit of a pullback, and I think then it will be a pretty good buy. Now, FCX is another one, again, affected by energy materials. And you can see in this pattern in here that we were looking for, you see these two blue spikes, they say that this time period in here is when a low is due. There are, this is the copper, the blue is copper right there because FCX is a copper and gold stock. And we were looking for a bottom in copper, which looks like it's coming. And this one just turning up right in here, 15% up on the week in FCX. We think this one is a buy on any pullback, or maybe a buy without a pullback. It's probably going to have a very good first month or two in 2016, so we are liking that stock. Other stocks, favorable mention on stocks that have done well this week. Joy Manufacturing has been extraordinarily beaten up 15% on the week. We think that stock is still negative. We're going to look for some more pullback in there in January. BlackBerry up 12% on the week, BBRY. That stock we see actually is putting on a much more positive pattern. Now, we were really negative on that stock, expected it to fall under 7, which it did, but now the pattern is really improved, and an area between 8 and 840 is an area that we're looking for as a buy. Alcoa, which will be the first to report earnings of the major stocks in January, up 10% on the week at resistance. We're looking for a pullback in there, but we have a buy area right around, let's call it 920 to 930 area in Alcoa. So that is the best of the week. For the worst of the week, well, it was last week that the solar stocks really flew on the upside based on their extension of tax credits. This week, well, they pulled back pretty nicely as expected. Solar City, a nice pullback. That was one we were short. Talked about that one. Nice profit as that pulled back about 8%. The big loser of the week was Chipotle, CMG. This stock really has got some issues. Man, when you talk about a repeating problem that happens as far as health issues go in their stores, well, this stock, the patterns in here are really reflective of that. You can see here in Chipotle on this weekly chart what has happened to the stock from just being the dream stock at 758 to making this broadening pattern or megaphone, as you see that, coming up here and failing a test of the high, and then all this bad news starts to come out and just a waterfall decline in here. The best we could see in here is that this has got all the way out till March before a real low is in place. Yeah, you might get some bounces in here, but we think that they're going to keep failing. Chipotle, just a stock that has been very, very beaten up. And another stock to look at in here, Chipotle, by the way, down 13% on the week. Pandora, we'll look at this one, down 11% on the week. Now, this one got a pop into the resistance area. You could see the cyclical patterns in here. We think that any rallies in here are still going to continue to fail. It might get another pop on the upside. You can see the cycle patterns in here as we're in this next rally, and then probably rolling over again. So we think that if you get a rally in here in Pandora, it is going to be a sale. Let's take a look at Bed Bath & Beyond, the retail which sells all kinds of home stuff, right? We love to shop in there, get their 20% discounts all the time in the mail. You could see the pattern in here as it continues on the downside. We had been very negative in here. This low continues also out into March based on the timing of the cyclical patterns. What other charts do you get any timing on? I'll tell you, probably none. Take a look at here at the slim ribbon on the daily chart. You'll see here the failure at the 89-day moving average, the down arrow in here as the stock from that point moves down from 56 to 48 right here in this negative momentum. We always talk about how important negative momentum is in there. Network Appliance, NTAP. This is NTAP. This is one we want to talk about. We have a feeling it's going to show up on our rankings and settings as a long side trade pretty soon. Everything about this stock that we look at is negative. Now here I am talking about potential long side setup and talking about a stock that's negative. Well, there's a couple things in here worthy of note when we look at this pattern. First thing is, let's take a look at the weekly chart, and you will see in here that we were expecting it to be declining, as you see right now, as it moves down in here, and here is the decline. Let me get my pointer for you to see this in here, and you can see that this is a pattern that we're following right in here. You see that? And it moves down just past that low area right there. There's a little bigger pattern in there that looked like it was bottoming a little earlier, gave you this little period in here, and that didn't work. Now we're at this period where they're both rising. So we're expecting a rally in there. That's after this big decline. So you could see it fails in here, gets under those moving averages on the weekly. That's the 34 and the 13-week moving average. Let's let's take a look here at the daily chart and look at a few things in here. We saw the top form with the evening star. Our subscribers got this, and the head and shoulders top that formed, and just a beautiful bear kicker that formed in there. Here's where the pattern turns negative in momentum, has this big decline in here, moves down from 31 all the way down to 25. Now look at this, very high volume, looks like an exhaustion gap. Nothing turning up in here yet, but we have a feeling this stock is going to make an important bottom in here, and this exhaustion gap at 25 is likely to be the low. So that's one that we want to talk about in the future as one that can be a better stock that's been sold very, very hard. That is Network Appliance. Also, favorable mention on the downside, Disney. This is a stock that has been negative, falls 7%, and momentum has been short-term momentum. The intermediate-term pattern has been negative in there in Disney. It remains so. UPS down 6% on the week. Amazon talking about using them less. That's what some of the talk is out there. There is support and a hammer in there, and take a look at that, and that looks like temporary bottom being set up there in UPS. That's it for the best and worst for the week. That's it for the opening segment, and we're gonna go right into the short-term view. So stay with me. All right, before we get into the short-term view, don't forget that we are running a trial, no cost to you right now, of our new offering. It's rankings and setups. All you have to do is go to the askSlim web page, go to the top to resources, and then look for rankings and setups. This is our new table. It consolidates all of our work in the best traded stocks, ETFs, and futures. I think it's a great product, and you'll get setups, usually 1 to 3 of them every single day. Good way to improve your entries. Want to get your feedback on it, and then this will be no cost to you all the way through the middle of January. All right, so let's get to the short-term view of the coming week. Of course, another holiday shortened week. This is always a week where, well, we're not really sure about much, as there's all of this tax movement that goes on, and readjustments and thin markets. So we're going to enter this period of our short-term analysis with the caveat that end of the year is always difficult, and we'll just do the best we can based on these short-term setups. Last week, same thing. We're going to give ourselves only a 60% as we got light crude gold and the euro really well. Did a nice job on those. We had the stock market and bond market completely flip-flopped because we thought stocks would move to the downside and the bond market would move to the upside in response to that in a little way. But stocks didn't do that at all. We made a comment that said, basically, and mentioned during the week that this was, a period that favored the upside in there, and that stocks might try a little bit on the upside, but they were a lot stronger than we thought. So we were definitely wrong on stocks and wrong on the bond market. The VIX last week, we said it was entering a period where we thought it would pull back. That gave us some suspicion about the stock market trying a bounce, but not getting up as strong into the resistance zone as it did. All right, let's take a look at the short-term view for the coming week. We'll start out in the light crude market. Now, light crude got a bounce and moved up into looking like a rising phase early, and you can see we marked that down here early. We try to give as many notes to our chart subscribers as we can as this early bottom came in. Not really a surprise, as we're at the end of the year. We thought we were going to get a bounce up into the 39 area, and that's right over here. We still think that's coming. We had this early bounce, have got some favorable commentary going out there, and it's been oversold. So this makes sense. This low came 2 or 3 days early for us. Not that big a deal, and we still think we're going to test this area up here. We're going to look for a test of 39, then roll over. Let's just we're not going to shift these cycles yet. We're going to wait and see how this settles out in here in the next week or so. But kind of, you see this pattern right in here? Well, that's right here. So we're going to look for something like this. We're going to look for a small change for the week in light crude and fail from around that 39 area. Next one that we're going to look at in here is the gold market /GC, and we have this set way out at 2 years so that we can get these alignments correct. And you see what we looked for in gold in here was, well, pop over 1080, maybe to 1100 we said. We weren't sure if it could get above that resistance before it got into this corrective period. That's where we are right now. This area right here, 1060, 1064, I think is a nice buy area. We're hoping for a little bit of a pullback. That's what we're going to look for. Maybe a little drop in here and then turn on the upside. We think this is a good buy area, and we think this was a good bottom right in here. So we're positive on gold right now, and we're going to buy any of these little pullbacks in here, and we think we're going to get a pop up to 1100 in the next 1 to 2 weeks there in the gold market. /6E, we're going to call this a bullseye. We had this as a positive trade, positive setup on our rankings and setups, and that worked nicely as it got a nice lift in here. Remember, we're looking at only 4 days this week, and this got up into the area that we expected. We're still looking for a pop in here. We're going to say 110.50 to 110.80, and then a roll over like this. So it's kind of an up-down week that we're looking for here in the euro currency. Again, not looking for giant moves in there as we are in this holiday week. /ZN. Now we're going to look here at the 10-year as our proxy for the Treasury market as we look at our short term. Remember, we're only looking at the daily patterns in here because this is our short-term view. So what happened in here, and you could see these cycles, very nice as these line up with the ZBs. That's what these are right in here. And you can see this was an early bottom. You see that right there, and it turns up. We're in this declining phase right over here. So let's say the stock market gives up some of this ground next week a little bit. You might get a little rally in here right opposite, but we're looking for this period out here into the first, second week of January to still have a lot of risk. So next week or the week after, we're looking for another downside move in here. So we're going to call this big downside risk. We're also going to say if any big day in either direction comes, we think it's a high odds it will be a down day. So we're going to give, possibly small up days and possibly big down days based on this pattern that we're seeing here as it completes a intermediate pattern that we're looking at. So for the stock market, of course, we were looking for big down. We thought the risk was a big down, and here's where we've gotten into this holiday week, which really has favored the upside. So does next week. The market did move up and moved up a lot more sharply than we expected it could, even though we were suspicious based on what we saw in the VIX pattern that we could possibly get some small up days and then turn down. We did not expect it to get up into this resistance zone. So let's take a look here at the S&P 500, and you'll see that right here as it moves up into resistance right now. And what our expectation was that this would be a small bounce, and then this cycle would take over and push hard on the downside. So we're not sure if we're still not going to get that. The problem is we came up pretty sharply into this resistance area and got up, most of the way from this area right here. So we're going to be in an uncertain area here while we wait how this shapes up. And truthfully, we expect a pullback next week. So we're going to say it's a down week in the stock market, but the depth of this decline is going to tell us a lot. If it's a minor decline and just a little bit of a pullback, then we're going to believe that this decline we were expecting ended right over here and ended early because of the holiday. If that's the case, we'll get a minor pullback and then a rally again and then another pullback as we complete this big down right in here. So we're going to really, make this iffy. We say it's a down week. And we're suspicious of a big down week, but we'll also Note that if it's only a small down week or even a little bit of an up week, then it's going to change the scenario pretty distinctly, and will be pushing out our expected period of this next big decline, which we think has a high probability. So we're going to call next week a down week in the stock market. When we look at the VIX, VIX, you can see the alignment that we were looking at that told us that we might get a bounce in the stock market this week. We thought that the VIX would fool around, right? Have a few more down days in here, and that's this right in here. That came, and you can see it was pretty severe right there. So what we're looking for is this period right in here of a bounce in the VIX. That's what tells us that we think we're going to get a pullback in stocks. The question is, how big is that pullback in stocks? We still think there's a chance it's going to be strong. But again, holiday week, who even knows? And just right now, best guess based on these patterns. VIX look like an up week next week. That's suggestive of the stocks pulling back from this rally they've had from this resistance area in this next week. That is our short-term view of the holiday shortened week coming up. Want to wish you all that celebrate Christmas, and all, of course, that celebrate the holidays, a very Merry Christmas, happy holidays to you all. We're wishing you health and a joyous New Year and prosperity as we move forward. Always grateful to you all for the support we've given, and we, the whole askSlim team, Arvi, and all that support what we do here. Really thankful to you all, and want to say that we are always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city.